Hi, everybody. Thanks for coming to my channel. It's Anthony Fletcher. Sure appreciate you being here today. We've got a good one today. We're going to talk about a whole purchase situation and how it's going to go through. We're going to go over the costs. We're going to go over what your payments are going to be. We're going to go over other payments, what you should expect. And we're going to do this really quick, like in just 5 minutes. So please stay with me and let's get going. Here's the house that you're looking at buying. It's a nice 3-bedroom, 2-bath house. Congratulations. It's being offered for $400,000. And you, after going to see with your realtor, go and look at it, you put an offer in at $390,000 and you ask for $10,000 of closing costs and prepaids being paid by the seller. Well, that goes to the seller and also the listing agent. And the listing agent, and they come back and say, hey, we'll give it to you for $400,000 and we're going to give you $10,000 towards closing costs, which sounds pretty reasonable. You usually say, yeah, I want to buy this house. Okay, you come to the lender and you talk to the lender. The lender says, how much money you want to put down? And you say, okay, 300, you want to put 10% down. So you're going to put 10% down. That's going to make a loan amount at $360,000. And he qualifies you, says, yes, you can qualify for that loan. And then what he does is they look at as far as the rate, and the rate currently is around 6%. And there's a little extra money left here as far as the closing costs that the seller's paying for. So you're going to buy the rate down to 5.5%. So there you go. Congratulations. You got your house locked in. You get your rate locked in, 5.5%, 30-year fixed. And we're going to go through what it's going to cost to close on this deal. So there's a little bit of fee to get that lower rate. That's $2,186. And then the admin fee, that's what the actual lender charges to do their paperwork. So this right here is basically all the numbers that show up on the cost situation area of the actual loan estimate. That's the official breakdown of all the fees that are going to be there. So for here, we're just going to show you what your expected cost could be. So administration fee, $1,100. Appraisal, remember that's for the lender. That's $800. You might decide if you want to have an inspection. That could be $500, and that's on you if you want to have that. Tax service fee, $86. That just basically gives the lender information about every year what the taxes are. Flood search 16, that's basically a Army Corps engineer map that shows that your home doesn't sit in a flood zone. Credit report 38. And then this area here, this is all the escrow and title stuff that is ordered by the listing agent usually. So escrow is like the cost as far as that the person that does all the paperwork back and forth to change the property into your name and pay off the seller and the realtors and everybody else is in charge of that. Your fee in there is $850, and so is the seller's fee. Title insurance, $580. That's the cost as far as what it's going to cost you in order to get a history of the report on that particular property. Make sure there's no liens on it when you close. And other costs like your wire fees and things like that. And the recording for the county is $300. So all of this turns to $6140. And then on this side, what you'll see here is you'll see the property taxes. These are the prepaids, okay? And also the impounds for escrows. So you choose to have escrows in there. So what's going to happen is that the seller at closing, you're either going to reimburse for the month, for the next 2 months. In Oregon, it ends in June. So we got 2 months left. So you either pay them, and taxes are $3,600 a year. So that's $300 a month. So you're going to pay them 2 months back for the taxes they've already paid out. And then you've got insurance that's going to be through whatever insurance company you want to go through, Geico, State Farm, whoever, but that averages about $600. Escrows, this is the impound. So in the state of Oregon, like a lot of states, what they do is they have impounds the taxes come due all at one time. And if the lender pays the taxes all at one time, or if you get a little bit of a discount. In the state of Washington, it's twice a year, so they only collect half. But in Oregon, this all at one time, so they collect 8 months, so that when you pay your other 4 months worth of payments, then that's going to actually equal 12 months. So when the county sends out the bill, they'll send it to the lender, and then the lender will make the payment for you. And then insurance, that's the other, they'll put 2 months worth of your property insurance in there again. So what will happen is that when it comes due a year later, there'll be enough money in there based off of you making 1/12 of the payment, included part of your escrow account. And there'll be enough in there so the insurance company to directly bill the actual lender. And then interest, that's just saying that if we close 5 days before the end of the month, then you'll have 5 days worth of interest that you'll pay up front. And then your loan, the first day of your 30-year loan, will start the first day of the following month you close. So you got $61.40 for these costs here, $38.60 for this number. So you're using the full $10,000 that the closing costs are done. So you're still only going to have to bring in the $40,000, which is the down payment. Okay, your payments, principal and interest, $2,000. Mortgage insurance, you're only putting 10%. Mortgage insurance is required, but if you have a 740 credit score, it's really low. It's only $53 a month. Taxes, that's your property tax, so that part goes into your escrow account each and every month. And then insurance, that also goes into your escrow impound account for when those come due the following year. So $24.03, and then you have a house account that you should set up for yourself. That's just a separate account that you can choose to do it if you want, but you should do this. $300 a year, that'll be $3,600 a year. That'll pay for things, issues that come up with the house. If you need to repaint it, if you need to, do some touch-up painting, you need to fix some carpet, you need to put down a little bit of new flooring, whatever, new appliance, you can also get that covered there. Homeowners Association, $100 if you live in a homeowners association. Neighborhood, you usually have to pay dues, and those homeowners association dues cover things like street repair, if there's a neighborhood park, things like that, upkeep like that. So you got $24.03 for these costs. Homeowner association, $100. House account, $300. And then here's your other fees that you kind of need to budget for on a monthly basis. You've got your electric, gas, or oil heat, water, sewer, $140, cable, $80, internet, $70, garbage, $30. So that comes to $470. So when you add all this together, you have about $32.73 per month that you need to budget for in a $400,000 house. So realistically, if you're making somewhere around bringing home $5,500 a month, if you're bringing home $5,500 a month, then that should give you an extra chunk of money to pay for any other expenses that you might have, gas, food, things like that, going out, whatever. But also don't forget about your savings account. So there you go. In just a short amount of time, we've completely financed your house, and you now know how much it would cost in order to be able to make payments and also to budget for a $400,000 purchase. So congratulations on your new home. Sure appreciate it. And if you did like this video, please like and subscribe, and let me know the things that you would like to see in future videos. Have a wonderful day, and we'll see you again in the next video. Bye now.